Hello and welcome back to the Real Estate RoundUp show. So I am super excited to be joined here as always by my co-host Andres Martinez and Tony Flores. And as always, my name is Kobe Zinn and I am your host. And we are super excited today to be talking about a topic that has been really very popular in the popular might not be the best word, but it's been a hot topic in the real estate industry for really this past year now, and that is what is going on with these interest rates and how is it affecting buyers, sellers, and agents, and really just the real estate industry as a whole. And we have a very, very special guest. And I'm really thankful that she is able to join us today, Africa Gibb, to share a little bit more from the expert's perspective. And we will make sure to get to that later on in the show. So be sure to stay tuned for that. But first and foremost, let's catch up with our co-hosts. So, what have you guys been up to the past week? Any quick and interesting stories you guys that want to share? Let's start with you, Andres.
As far as for me, I did have a, a deal where it did not meet appraisal. So as interest rates have gone up, some home prices have sold for less. Therefore, when trying to find properties to match, even on CMAs for a listing, instead of doing 3 months back, I'm actually having to do closer to 45 days just to make sure I match what's on the market as of recent. So there has been an adjustment due to higher interest rates. Some prices have tapered down.
Right. Yeah, and that's really, really, I think, relevant to the topic today, right? So, different things are happening in the industry. How are they affecting, what's going on, right? And I think it's really important to, today to get a expert's perspective on that. So, how about yourself, Tony?
Hey, real quick, Andres. So, real quick, when it didn't meet appraisal, so what happened with that? What happened? You were representing the buyer, is that right? And then what
So,
happened?
so I was representing the buyer because the buyer was going to uh, use a specific program as far as for them to get into this home. We had to negotiate the price and we had to practically move forward with the appraised value.
Right. Okay. So the seller needed to adjust their price went down. Is that right?
That is correct.
Yeah. So that's really really good good news for the buyers. And if the seller, I'm not sure if the seller is going to be selling and then going back into the market, but they, right now is a time when people are kind of finding deals, so it helps offset the interest rate. That's kind of like what I'm getting from this. Is that right? Would you agree with that?
That is correct. So right now, with interest rates where they're at, they're a little bit higher. So a lot of people that are first-time home buyers and barely being able to get into the market, there's very thin margins. So being creative and having the help of the lender guide us, we got to do what's best to try to get a deal done.
Awesome, awesome. Okay, cool. All right, so yeah, so kind of just one quick story. I had worked with a, a buyer, and they came back. They were interested in buying again with me. So in this case, they wanted to buy a lot, but the lot is within the city limits, and they were buying it actually from an individual owner. So the owner was selling it, but neither of them knew how to do the paperwork on it. So in that case, and I've done it in the past, I've worked either as an intermediary, or in this case, I worked representing the buyer only. And it was actually really helpful for the seller because everything went through the process, the proper procedures, the paperwork was filled out correctly. And they actually found out through a title search that their name was connected to a lien from 2007. So here we are, like 15 years later,
Right.
and they had a lien attached to their name from previous business. it wasn't tied to that specific property, but it was still lingering over their head. So they were able to get it resolved and get it basically kind of clear their name from that lien. So it helped them. And also, so everyone was happy with the buyer. The buyer was happy. They got the clean title. And the other thing interesting about this was that the seller was selling it with the special warranty deed. And so I told them not to use a special warranty deed. If you know, in Texas, there's general warranty deed, special warranty deed. So I explained them the difference on that, and now they got a clear title for the property, so they're happy about that.
Yeah. So it's all good news at the end of the story, right?
Yes. Yeah.
We're definitely in a buyer's market.
Right. And that's one of the things I think is really, really interesting about, I would say, the industry in general for anybody kind of outside looking in, or, even any agents. It's all about problem solving, right? It's helping people solve their problems. And I think recently with, what's been going on and what people are hearing on the news with, these interest rates and all of the fear and uncertainty in the marketplace, I think agents can give a pretty good perspective as to their advice and their opinions on this for, people who are either looking to buy or sell. But, I think it really comes down to, understanding it from a, kind of like a mortgage broker or a mortgage lender's perspective as well. And I think that's more of an expert opinion. And as you know, in the real estate industry, agents and title companies like Tony, we were just talking about, and also mortgage lenders and all these different vendors work together to help put the deal together and move things forward. So that's why we have a very special expert guest joining us today. Africa, again, thank you again for being here. And Tony, this is it's a good friend of yours. So if you don't mind, kind of introducing who our guest is for today.
Yeah. So Africa is a wonderful loan officer. She's working with Thrive Mortgage. She's licensed in Texas, so she can help really. And she can help and get things done very quickly. I can attest to that myself. She helped save a deal. I was actually representing the seller in this scenario, and it happened to be a mobile home. And what we found out during the process was this was a VA loan as well. So she works with VA veterans, and the lender that was working with the buyer, they actually had to back out of the deal. Like, I think we had a week left until closing because it was a single wide. I think they only financed double wide, or I might be mixed up on that. Well, yeah. Africa, if you remember that one, you came in and we closed on time. So I think she had maybe 5 days left. And so I was, very, very impressed with that deal. So Africa can do lots of interesting stuff.
Yes, thank you guys for having me here. I'm very excited to be here.
Yeah, absolutely. Thank you for joining us. And I think the big question I think a lot of people have, just first and foremost, is just, at least for the past 12 months, right? So what has been going on, right? The elephant in the room, what's going on with the interest rates? How do you explain it to somebody who is, kind of on the outside looking in?
Yes. So for a couple of years, we had very low rates, which was not normal. Normal rates are in the sixes. I'm going to date myself, but I started lending in 2008. Rates were in the six at that time. And then after 2008, they slowly started to come down. And they were very, very low. I was able to finance some deals at a 2.75, something unheard of. I mean, it wasn't normal. So when rates went back up to the norm, people were already accustomed to seeing those low threes, fours. So there was a lot of like a shock, right? Because at the same time that rates went up, because of the pandemic, rates were so low, prices increased a ton. I don't know if it was like 20-something percent in the last couple of years. So it has been harder for people to qualify because prices of homes went up and rates went up. So we had people that were under contract, probably, especially construction loans, were under contract with a 3, and then suddenly before construction was done, it was like a 6, doubled, right? And in the last couple of months, we've even seen rates in October go to the 8s. So, it's been quite a shock for a lot of us because I had not seen rates go up so quickly in such a short period of time, because they gradually went down, but then they increased in a couple of months, like 2-month period, So it's been hard getting people. This last week, rates have had a little bit of a reprieve. So right now, for example, I just got a call from a customer before I jumped on the call. He had been pre-approved in September. The end of September, the rate he had gotten was a 7.625, and he found a home today and I priced it, and the rate is a 7.25. So there has been a decrease in rates, thank God, right? He did qualify with the 7.625. Obviously, he is happy now that it's a little bit lower. So, it has been a little bit of an improvement on the rates since last week and this week.
Right.
Awesome.
Yes.
Is there any reason that we can contribute the dip in the rates as of recent?
Yes. So the rates have to do a lot with the economic health of our country. So depending on what the economics is doing, inflation. So there were a couple of reports in the last week where inflation had decreased, job creation had increased. So it has to do with overall economic growth, in which, according to the last reports, it's getting a little bit better. Therefore, the rates are going to decrease. Yes.
Awesome.
That's good to hear.
Yes, I know.
Yeah.
We're excited. Every time there's a little dip, they're like, oh, yes, we're happy.
Yeah, for sure.
Yeah.
And then so what's interesting is like there's different types of things that y'all, that lenders have available, right? So there's creative ways to buy a house and things like that. So can you talk about maybe, different ways that people are making houses more affordable?
Mm-hmm. Yes. So one of the ways that it's not new. It's been programs that we have. However, because the rates were so low, we didn't need to do those. But
Right.
they're called the buy downs. So there's 2 different type of buy downs. There's a permanent buy down where you pay a certain amount to lower the rate, and it stays for the duration of the loan. Let's say most of the loans that I do, because I do a lot of first time home buyers, is 30-year loans.
Mhm.
That's mostly what I do. So let's say you're having a 30-year loan. So you permanently buy down the rate. You pay at closing an extra fee to lower the rate. That is a permanent buy down. Then we have the 3-2-1, 2-1, 1-1 buy downs. So those are, let's say right now the rate, and just to explain real simple numbers, let's say the rate is at 7.5 today. They have to get pre-approved with the 7.5 rate. However, they do a buy down. There's the 3-2-1. So if you have a 7.5, your first year you buy it down 3 points. So it will be a 4.5. The second year it'll be a 5.5. The third year it'll be a 6.5, and the fourth year and on it will be the 7.5.
Yeah.
Then we have the 2-1 buy down. So we have a 7.5 rate. The first year you're going to have a 5.5, the second year a 6.5, and the years on the rest of the term, it'll be the 7.5. Mm-hmm. So a lot of builders especially are using this program to help people get into homes, because the buy down, it's like a subsidy. It's an amount. So so I wrote down some numbers so that I can be prepared and show you, just to have an example. So let's say you're buying a house that's $360,000. Your principal and interest payment on a 7.5 will be $2,391. Okay. So if you do a 2-1 buy down, the first year your principal and interest will be $1,941. So that's almost $450 difference on the payment.
Mm-hmm.
That amount of the interest, the $449 or $450, has to be paid. So the seller's prepaying the interest for those 2 years or 3 years that they're doing the buy down, so the customer can get the lower interest rate for those years. So basically the seller is prepaying the interest for them. So
Right.
that amount has to be paid by the sellers or builders.
Okay, so you're saying that's something that comes from the sellers,
Mm-hmm.
right? Okay.
Yes.
So this is a seller contribution. So
It's
it's
a
more
seller
beneficial instead of lowering the price, because
Yes.
more than likely they will still comp at those higher prices.
Mm-hmm.
But instead of reducing the price of the house, they can still keep the same sales price,
Yes.
but contribute and prepay the interest, right? That's
Correct.
kind of what works best.
Yes. And
Because the buyer ends up saving more money that way, correct? Than a
Yes.
$10,000 drop in a sales price. Instead, take that $10,000, buy down the interest rate, and there's going to generate a savings much more than $10,000.
Yes. And for this example, just so you have an idea of numbers, the 360, if you're doing a 2-1 buy down, the seller contribution would be $8,471, which is very, you can negotiate that. It's very doable
Right.
to negotiate $8,500. Like you said, instead of reducing the sales price, helping the buyer with that buy down.
Okay. Awesome. And
Yes.
do you have an idea of like how much the $8,800 buy down would save in interest?
Well, yes, you caught me off guard. I
We
didn't
have to
get
get
that one.
figure out, right?
But I can do it quickly, really quickly. So it's
All right,
450
no problem.
times 12. That is 5,400 just 1 year. So
Okay.
just for the 1 year, it's 5,400 for the first year.
Okay.
So it
Perfect.
depends how many years they do. Yeah.
Awesome.
So, Africa, the client falls in love with the house. They gotta have this house. They really, this is their dream home.
Mm-hmm.
We negotiate the buy down as concessions
Mm-hmm.
through the seller.
Mm-hmm.
Is there any limitations as far as for them being able to refinance in the future?
No, actually, that's a great thing. Also, after 6 months, they can refinance. So let's say that next year rates go down. Let's say right now it's 7.5 and they want to refinance, which we'll talk about. Let's just say next year it's a 6, right? And they want to refinance. They're able to refinance. There's no penalty for that. And whatever amount of money let's say the 8,500 that the seller paid that was not used gets into their principal. It pays down their principal and interest. So let's say they have $5,000 left over. That is used to for their principal and for the principal. So there's a principal reduction. So you can definitely refinance down the road.
Mm-hmm. And will there be any cost to the client that's refinancing?
A refinance has a cost, yes. For people that do loans, and some lenders are doing this, for people that do loans right now, we have a refinance later on with no lender fees. So we will not charge them any lender fees. There will be title fees though, in the escrows and the prepaids and stuff, but there will not be any lender fees if they finance with us. Mm-hmm.
Right.
Awesome.
So they can get a temporary buy down and then refinance later.
Yes.
Everyone's crossing their fingers that the interest rates will go down, so that the temporary buy down essentially will be affordable down the road for them as well, right?
Mm-hmm.
That's kind
Yes.
of the hope on that. And of
Yes.
course, nobody can for sure predict the future on the interest rates, but that's kind of like. But you mentioned that they still have to qualify for that higher interest,
Yes.
the highest interest
Correct.
rate, so that it still would be deemed affordable when if the interest rates
Correct.
Yeah,
Yes. So
definitely.
it's very
Okay.
important that we have those conversations with the customers, that they know if they don't refinance, that in 2 years, 3 years, their payment is going to go up, and that they still qualify. They must maintain the same income that they currently have. So those are conversations that we need to have with our buyers.
Mhm.
If we have people that are know that 2 years down the road they're going to have um, an increase in income, a promotion, things like that, then this would be a good program just in case they're not, um, there's not going to be a payment shock. So we do need to qualify with the higher interest rate because we want them to succeed. We want them to be able to
Right.
keep their home down the road as well.
Okay. Perfect.
Yeah.
Right. And I think, one question that a lot of people will have, and I definitely think, it'd be interesting to kind of get your take on in Africa, but really it's a question for all of you to kind of think about as well. And that's what do you tell people now if they're kind of coming to you and they're looking to buy a house and they're asking you for advice, right? They're saying, should I wait?
Yeah.
Or should I pull the trigger now? Like, how would you kind of approach that conversation?
Well, for me, is in our initial consultation, what we do is we take a look at their overall situation, what their current financial situation is right now, what their goals are, and their needs. Because some people that come to us, like my landlord just asked for the house. I need to move out, and then they're able to see, okay, do I continue renting? How much is going to cost me to rent a similar home, or do I buy? So it is very it's an individual. Each person is going to be different. We definitely look at some customers, it's not a good time for them, and we need to let them know. Show them the numbers, we show them their credit. That's another thing. So there's ways, but basically everybody's going to be different. We need to look at their situation and just make sure that this is going to be a good option for them, and it's going to be very different with each one. That's my take.
Right.
Yeah.
Right, and I think it's a good take because I think people want to hear like a one answer or one solution, but it's really coming down to talking with an expert, right? Like
Yes.
yourself, like a real estate agent, and then figuring out whether or not it's a good decision right now
Yeah.
to move forward with that, or if they need to take an alternative direction in that, and they'll be
Yeah.
able to do that as well. But continuing the relationship, obviously, to move forward.
Yes.
Right. So I think, another question that, we all have is, and it's really hard to kind of talk a little bit about this and to answer these questions, but, what happens in the next few months, right? So, as we kind of and wrap up 2023, moving into 2024 with it being an election year and all that good stuff, what can you say on that? If you could say
Mhm.
anything on what you
Yeah.
think is going to happen in the next couple of months.
Well, I've been reading a lot. So I follow MBS Highway. If you guys don't follow Barry Habib, he's really knowledgeable in the market and what's going on. And he does all the statistics and really digs deep on what's going on in our economy. So they're thinking, rates will probably be getting a little bit better the second half of the year, not the very first. But it's very hard because it all depends on the economy and the reports. It depends on the Fed minutes, when they meet, what they're going to decide to do. The last Fed meeting that they had was that they weren't going to increase rates anymore. However, there is a thing called quantitative tightening where they're not buying MBS right now. So it just depends what they decide to do. But I think maybe in the latter part of the year, we may see a little bit better rates. And keep our fingers crossed too.
I have a question as far as since um, we're foreseeing the market to be a little bit tight from here to the first 2 quarters. Is there any programs that the government or any grants for first time home buyers or just for buyers in the market that they could benefit during this climate of high interest rates?
There are programs for state programs for down payment assistance. However, the rates are even higher. So those we just leave for the people that really need to move, that it's urgent for them to move, that they don't have enough cash. There's no seller concessions, but the rate is higher for them. There are available programs. There's like TDHCA, TSHAC. There's a third one. I forgot the name. It's a really weird name, but there are programs for them.
A program I have benefited from as of recent for the last 6 months is USDA. Can you explain that to us a little bit?
Yes, it's a USDA loan is a loan that it's 100% finance, so there's no down payment requirement. However, the property needs to qualify for USDA financing. So there's a website where you can go in and plug in the address, and it'll tell you whether the property qualifies. But it's a really good program. The rate is very similar to FHA and VA, so it's a government rate, so they're very similar, and there's also an income requirement for the family. So, if they fit into those first-time buyers, that's a great program for them. The DTI requirement's a little bit stricter than FHA, but it is a good program. It's 100% financing, and seller can contribute up to 6% to the closing costs. So it's a very good program. And there's a lot of areas here in San Antonio that qualify for it, the surrounding areas. Mm-hmm.
So you're saying that there's probably, if somebody really is got things in order, there's homes are still affordable. Would you agree with that? And they can get in with little, or in some cases no money down if it's in the right area?
Yes, definitely.
Okay. Mm-hmm. All right.
What I like about the USDA is the interest rate is pretty similar to the market rate.
Yes.
Yeah.
It's a good rate. Yes.
So someone can get, someone could possibly shop around, find a house that's affordable, and actually, if it's been sitting on the market, make a lower price. So it'll, make a lower price offer. It might be a good time of year when things are a little slower, as opposed to starting out in the springtime when everyone's shopping, and now there's more competition.
It's crazy. Yeah. Mm-hmm.
Yeah. Okay. And then, so you mentioned that you help not only qualify the borrowers, but you can essentially help kind of just be a part of that, part of that puzzle. Like, this is where you're at right now, and everything, financially, this is a snapshot, kind of like a Polaroid. This is where you're at right now. This is what you could do. Like, what other things can you do? Like, you've been in the business a good while, since 2008, you mentioned. So how does someone with your knowledgeable, how do you help navigate them? Like, what are some of the things that
I think that the key for all of us in this current climate is to educate and teach and walk our customers through the whole process. So educating them, knowing where they're at, knowing what their goals are. Because a lot of people, like, I ask them, okay, do you have a budget? What have you thought about your max payment? Some of them don't even know. So, it's like going through what they want, what they can afford, what they need to work on. That's another thing, because some people really want to get into a home and they're willing to do the work, and whether it's working on their credit or paying down debt or saving money, come up with a plan for them. And I think that's something that we all need to do, is educate our customers, because a lot of people hear from all over the place, from their tias and from their friends and from whoever, right? But not the actual information, the correct information. On credit, I get that a lot. They're like, well, I heard if you do this. I'm like, no, that actually hurts your credit, So it's just educating. I think that is the tool for us right now, to educate them. And maybe they're not going to be ready right now, but a couple of months. Sometimes it takes them a year. I've had customers that work on stuff and come back 2 years later, and they're like, okay, now I'm ready. It's doable. They just need to put in the work, and we need to help them and guide them. Yeah.
Okay. Absolutely. That's something I think is so important, right? Like we're just talking about, having conversations with experts, right? Instead of just believing all of the
Yes.
noise that are out there. And
Totally.
we'll make sure to wrap up here really quickly. But just real quick, Africa, one, not to go completely off topic here, but we've been mostly talking about, I think, first time home buyers and home buyers who are looking to kind of get into houses and maybe going up, going down, right? But what about on the investor side? What would your advice be for somebody maybe looking to buy a second home, third home? We're not talking about like flippers or
Mhm.
like institutional investors. We're talking about like mom and pop looking to buy one or two rental properties to kind of
Mhm.
diversify their investments. Is now a good time to do this, or maybe wait a little bit?
I think when we have investors who are already investing, they know their numbers. They know what's going to make their deal work, right? They know that they can refinance down the road. If they're going to get a home right now that next year is going to cost, because when rates go down, things are going to get crazy again. Home prices are going to continue to go up. And home prices, like you were saying, Andres, right now, but I just read, that the appraisal issue that you had, but home values continue to increase. Not at the crazy rate that we had last 2 years ago, but they still continue to increase. So investors know that buying right now is still a good time. It's a good opportunity if they get a good deal, right? There are programs for them. Some investors are very savvy with their tax returns, and you know they don't show as much profit. We have DSCR loans that they're able to do, or bank statement loans. So there's programs available for investors. Now, if you're looking, like if you're a normal person looking to invest, we have those programs as well, with as little as a 15% down if it's a single home. If it's two or more, then it's 25% that they have to give down. But we can prepare them for that. Tell them this is how much you're going to need. This is how much you're going to be having to have of assets, so they can get prepared for that.
Right, absolutely. And it just
Mhm.
aside from all of the, all the expert advice and everything we shared so far, I think for our viewers and listeners out there, one last question is just how could a knowledgeable lender like yourself help these investors and home buyers? Is there anything else that, we haven't touched on that you guys do, that you guys help help these, investors and buyers that we haven't talked about yet?
Yeah, well, we have, I think having the tools, first the knowledge, right? Having the information, knowing the different programs, having the different programs. There's so many programs out there that are non-QM, what call non-QM, they're non-traditional lending, so that you can think outside the box, of what things can be done. Having the programs, having the tools also to compare one program to another. So we have a tool, we have a system where we can show, okay, if you do a loan with a regular conventional loan with 15% down, you do a DSCR loan with 20% down, or whatever it is, and it compares how much the monthly payment is. And let's say they're thinking of buying it and keeping it for 10 years because they're thinking, I'm going to keep it for 10 years and then sell it. How much interest they're going to be paying in each different program, so they can make an educated decision which was the best program for them. So there's just having the tools as well to do that.
Right? It's the knowledge and then also the tools. So make
Yes.
sure to reach out. And just on that note, Africa, thank you so much for
Thank you
joining us
guys.
as a guest today. For people that want to reach out to you or follow you, I know you guys are doing some pretty exciting things, even thinking about talking about starting a podcast of your own
Yes.
as well. So, what are some of the best ways for people to follow you and to reach out to you if they want to do that?
So I'm in all my social media. I'm Africa Gibb across. So I made it very easy. So everywhere, Instagram, Facebook, LinkedIn, everywhere I'm Africa Gibb. So it's very easy to find me just by my name.
Awesome.
Yes.
We'll make sure to
Thank
leave that
you.
in the description down below. Make sure to reach out and to get more information. But other than that,
Thank you.
uh, Tony, Andres, any last thoughts? Tony, we'll start with you. Any last thoughts, last questions as we kind of move forward and wrap up this discussion here today?
Um, well, right now I feel like there's just a good opportunity during kind of the slower months to see what's out there, see what's on the market, and some people are making offers, that wouldn't have been accepted, a month or two ago. There's houses, that are sitting longer, so it's just a different opportunity. So I'm looking forward to our continued growth in our podcast and helping clients and just educating them, bringing awesome resources that can help us educate, because we can always talk about these things, but we really want to make sure we're getting you great content, and Africa certainly delivered today. So I'm really happy that she was able to join us. And then we're looking to help more people find the right home, whether in the San Antonio and surrounding home serve people. Really, we just have such a wide network of people here within our organization. So love to be able to be a resource for people.
And as far as for me, Africa, thank you so much for your time. I believe, just like everyone on this podcast believes, education, as far as educating our clients, setting them up for success, is the best route for a realtor, a lender, right? And to anyone that's out in the market, do not be afraid. I am still closing properties at 4.99, 5.5 interest rate, even 0 down. And also, I'm getting some of these builders to pay some of your closing costs. So get with an educated agent that truly cares, wants to set you up for success. Sometimes a new build might not be a route. And like Africa, she does a lot of existing homes. So she likes to educate. I like to educate. We can team up together and find you a good deal as well. So don't be afraid. Just get with an educated agent and have an educated lender.
Yes.
Awesome. All great advice. And Africa, thank you again for being here on the show. Loved having you on, and make sure to reach out, you guys, if you guys liked what she had to say. But other than that, appreciate you guys for tuning in, and we will see you on the next episode of the Real Estate Roundup. Take care.
All right.
Okay.
Bye.